Hello and welcome to another episode of Fintech Focus TV with me, Toby. This time I am utterly delighted to be joined by Bernie Thurston from ULTUMUS. Bernie, how are you?
Very well, thank you very much.
Listen, lovely to have you on board. Just been hearing about the business, and it's sounds like a hell of a journey over the last 4 years or so. You're in a fascinating space that's sort of evolving all the time. But for everyone, or the few people, I guess, in your space who haven't heard of you so far, give us a little bit of background about ULTUMUS and what you're doing over there at the moment.
Certainly, as in ULTUMUS was set up in November of 2016. We were very fortunate to be really focused on benchmark data. Our primary focus was ETFs, and we've been very fortunate with the continuous expansion of ETFs on a global basis. When we really set up to be specialists within this particular area, what I'd noticed, I'd spent a year out working at Source or Invesco, as it's now become known. I noticed that the quality of ETF data, people had shoehorned ETF data into the existing formats, be it mutual funds, index data, et al. And I found, as I was going through that at Source, the data quality just wasn't there. The data points that you wanted to be able to interrogate just didn't exist across the industry. And that was really the genesis of ULTUMUS. We wanted to be able to address the desire for this data and encourage the whole marketplace. I'm a great proponent of ETFs. I'm an advocate of these instruments. They are fantastic, and I just felt the data didn't reflect that sufficiently.
I think that's really interesting, isn't it? Because it's not like a brand new space, and what we're talking about here is what I love seeing is people who are seeing gaps of genuine misuse or opportunity and sort of filling it with real solutions. Why do you think that sort of gap in the market existed, and how far have you gone so far to solving the problem?
I would love to take the credit for all of this, but as we come on to this, I think what we discovered was the fact that, yes, these products were set up as in first product, 1993 TIPS in Canada. Yeah. These products are actually relatively old, 20 odd years associated with these things. The major idea was when they were first set up, the spreads were a mile wide. People were just trading them because they couldn't make money out of them no matter which way the market went. As they've become more and more popular, the spreads have tightened associated with it. The big issue that came about was that the people's data formats, the distribution hadn't adapted with this change within the market. And we were very fortunate in the fact that iShares launched the new FDF format in 2019, and that was a game changer. They deliberately released it mainly to enrich the data that was available to the market, and that has given us the opportunity, because of our distribution platform, our modern technology allowed us to accumulate that data, distribute it very quickly and easily, and enable our clients to be able to leverage those new data points. And we've now seen more and more clients come back to us, the ETF providers themselves, wanting to create similar enriched data sets. So the major part was, yes, the data formats that were suitable 15 years ago are no longer suitable. Obviously, the products have changed. We've got hedge products, we've got leverage products, we've got share classes associated with ETFs. None of these were thought of 15, 20 years ago when the data sets were originally created. We are now seeing a new genesis of data sets being made available that enable people to trade these products more accurately.
Yeah, I think that's fascinating, isn't it? And it came through from a really interesting conversation as well, because this was something you were getting yourself frustrated about, and then all of a sudden you had a business. Tell us a little bit about how that happened.
Indeed, I was very fortunate. This came about in terms of I was getting frustrated with the lack of data within this industry. I was very fortunate. I was introduced to Graham Tuckwell from ETF Securities. I spent probably about half an hour explaining my frustrations and what I wanted to do about it. He agreed and funded the business. I was very fortunate in terms of he understood exactly what we were talking about, and he had exactly the same frustrations. And fortunately, ULTUMUS was the first company he invested into in this individual space. He's obviously now set up ETFs Capital, and ETFs Capital has invested in a number of organizations who are looking to enhance the ETF ecosystem. So ETF Stream, Velox, Skylight IPV, ETF Securities in Australia, all of these organizations are deliberately set up to try and enhance and enrich the ETF ecosystem as a whole.
That ecosystem is interesting, isn't it? Because it sounds like that there's the ability to help each other out and provide this sort of, I guess, unified solution. And I think that's becoming more, rather than the sort of enterprise player coming in there and providing a one-stop shop for people. We're seeing more and more examples of specific problems being solved by sector specialists, who can add real depth into it. Do you see that as the future?
Oh, completely and utterly. And what we're seeing is, yes, we are a data aggregator, a creation of data. We've got partnerships with ETF Stream, where they're doing the analysis, they're doing the marketing associated with it. We've got Velox, who are making market-making platforms. If we try to combine these entities, we miss our focus more than anything else. We've got the organizations who are specialists in what they do, and that's really been our edge. As in terms of ULTUMUS, we employ fund accountants specifically so that we can actually go and analyze these ETF products, making sure we're representing them correctly and be able to question the ETF providers. Again, this is exactly where these specialist little units have come into their own. We're there to provide solutions to the industry. If we couldn't do this as one large amalgamous group. Yeah.
And I think that's that's been a seasoned shift around that for that sort of thing to happen. And it's I guess it sort of comes in with the sort of growth of the ETF sector, as you say. Look, we're talking 20 odd years plus of existence, and yet we still continue to see considerable and seismic growth in the area. What drives that, and where does it end? Where does it go?
Well, to my mind, I think the ETF industry is wonderful. Being able to get, and listen, I hold my hands up in terms of all of my pension is now in ETFs. And when you see in terms of the diversification for low cost that I can get associated with this across multiple asset classes, I work very closely with 21 shares for the cryptocurrency ETFs as well. I do work for DWS for their commodity ETFs. So it's all this type of things in terms of giving me as a bog standard person off the street access to these individual products for my pension, I think is wonderful. As in, I still believe there's going to be a huge expansion across Europe associated with this. We've seen this within the US and Australia, all the people who've got their self-invested personal pensions. When you start looking at, by the way, do I want to go and buy a mutual fund for 200 bips versus a ETF with 20 bips that gets the same performance? To my mind, it's a no-brainer. I think the ETF industry is going to continue expanding, and yeah, I think it's rightly so in terms of I'm not interested in going buying single stocks, apart from Amazon these days. It is just that whole, but the whole reason why I say that is all of our business is on Amazon Web Services, mainly because it's given us so much flexibility associated with that. But the whole idea in terms of, I still think the ETF growth within Europe is just at its very beginning.
Talk to me about that, tech, because it's interesting, isn't it, about how businesses such as yours are sort of embracing it and working with different areas of AWS is obviously something you've chosen. Talk about the rest of the tech stack and what sort of nimbleness it's providing you.
No, I have to say in terms of all of our tech stack is AWS. In terms of, like, we use DynamoDB because effectively when we started off, we were seeing the data was changing so regularly. We didn't want a standardized SQL database. We chose a NoSQL database because we wanted to be able to grab and store every data point that was available within the industry. We're never archiving any of the data off. Thus, we always want it available and online. Thus, we wanted to store it ad infinitum. So we use the AWS NoSQL database. It's all black box technology. We just plug the data in and can retrieve it at will. We use AWS Lambda, the serverless technology for processing the data. And again, the major rationale behind that was the fact that we have very definitive scale point. So when the US closes, obviously we get MSCI indices, S&P indices, a load of ETF data. We want to be able to scale immediately upon receipt of that data and be able to process it, get it out to clients in under 15 minutes. And again, the way we distribute it is a JSON-based API using Amazon's API gateway. So the whole idea behind our technology stack was effectively it was all black box, extensible and expandable technologies. So we didn't have to maintain it, and we could just expand as per requirements. It means that we've got no internal infrastructure people. We've just got developers that enable us to keep on expanding the requirements associated with this.
So it sort of comes back down to that sort of triumvirate of ease of use, of scalability, and of cost saving. That sort of is everywhere we look.
Cost saving is always an interesting one with AWS. Yeah, I've got to say it's one of those very interesting things. It's very flexible, but you've got to keep an eye in terms of the cost associated with it. Like, again, we did it in terms of for reproducibility of our system. So we've got a dev environment, a UAT environment, and a production environment, all of which are identical. And it is that whole idea in terms of that is, yes, there is cost associated with that. Previously, in other iterations, we had massively scaled down dev environments, a slightly scaled up UAT environment, and then your production environment, but then your tests weren't 100% valid. Our tests are now 100% valid, but it does come at a cost. But it, to my mind, being able to do that is a worthwhile endeavour.
And it's where you take that cost from, isn't it? And where you save elsewhere. That sort of helps with. And
I was going to say that's our major driver these days in terms of we're seeing the fact that we don't need to store all of our data since when we first started in our dev environment. So we're adapting as we go along and go, right, where do we need to store all of this data? Where do we need to be able to scale up instantaneously? That's really where we engender costs, and we're just being careful on that side.
You mentioned beforehand that you sort of, I guess, staked and hedged your personal future on the ETF world with your pensions and such like. Tell us a little bit more about why, and you called it a no-brainer, I believe. Tell us a little bit about why everyone isn't moving down that road and why they should.
And then I think it's one of my frustrations with it within the industry in terms of I go on to the normal, should we say, retail-based investment sites. I'm not going to name them here, but if only to try and identify the ETF products. And this really was where I started this conversation in terms of ETFs are a financial instrument in their own right. You don't want to be going through all the mutual funds. The fact that I know the ISINs and I can actually go and dig out the ETFs shouldn't be a prerequisite upon the investors of these individual products. And this is my major frustration with the industry as a whole. We can't be going through all the old mutual funds. We need a section that says, by the way, these are the ETFs. These are the ones that have got the FTSE 100. These are the ones that Euro Stoxx 50. These are the Stoxx 600. These are the total expense ratios associated with them. Take your pick associated with them. And I think, and listen, I'm not the person to do this. If somebody needs to come up with a good rating system, and I've seen a number of people who've tried, and this is one of the reasons why I'm not going to try and do it, in terms of what are the good products associated with this. Unfortunately, you're always going to annoy individual people. And again, I think the reason why ETFs are going to grow is the fact that they can adapt to this market so very easily. We've seen a massive expansion in terms of the thematic products. So robotics and automation, artificial intelligence, the medical future, these are all themes that people have been able to encapsulate within ETFs and launch to the market at a cheaper price than anybody could do in any other way, shape or form. And again, with this, we've seen the ESG products there's been I believe a surfeit of them launched over the last couple of years, because that's really where investment has been. People have seen the fact that people are interested in ESG products, and thus ETFs have been created to reflect that requirement. But I think that Europe is still very institutional based. We need to see this driven more and more on the retail side, and we need to be able to see the pension providers, and especially the self-invested personal pensions, reflect that. There needs to be education process in terms of the cost associated with them and the return that you get on these products as well. And I hate to harp on about it, but in terms of the liquidity and tradability associated with these products, ETFs have never had the Woodford type of idea where they've been locked out and nobody can sell their products. Throughout all of the financial crises, ETFs have kept on churning through.
Yeah. So it's interesting, this, isn't it? Because you said, look, you've seen people try and tackle it. You're not going to tackle it. Where does that work? Who's responsible for the financial education around this area? And we've had people on this show over recent weeks who are doing great jobs at sort of education around finance and investment and such like. But it still remains sort of a dark art in many respects. And those who play the game do it really well. But there's a sort of lost tribe, as you're alluding to here. How does it change?
I think it is quite interesting because obviously ETFs have been taken up with great speed within the US. But they're effectively, if you asked about the S&P 500, you've got the SPY, you've got the diamonds, you've got the Qs. It's very single focused. People have got individual products that adapt to certain aspects. And okay, there may be a couple of other ones like the IVV for equivalent of the SPY, the VOO equivalent of the SPY as well. But within Europe, we've got so much fragmentation. There's so many different variations of the same product in terms of, by the way, is it S&P 500, or let's keep it more European? Is it the FTSE 100 accumulating? Is it the FTSE 100 distributing? Is it physical? Is it synthetic? Is it hedged into a different currency? Again, you need to really understand these products. And yeah, this is the predominant reason why the ETF industry within Europe is institutional. We need a simpler, and again, to give them credit, iShares with the core product did exactly this, where these are the core products. We need a simplified set of products whereby we can go across Invesco, DWS, Invesco, and go, by the way, which are the products that are most suitable for investors? And that's really where I think people like Hargreaves Lansdown et al. Should be doing the education piece in terms of, by the way, these are the products that we've selected. Yes, choose which ones you think are applicable to you. And I think it is one of those very interesting things in terms of, from a pension point of view, right, how many ETFs do you actually need? You probably need effectively a gold, a couple of commodities, a couple of fixed income, and depending on your risk appetite, an emerging market, stock 600 and S&P 500, and you can cover off within 6 ETFs every major ETF portfolio. And then it's just in terms of the allocation ratios associated with those individual products. And that's really and you can do that at such low cost. I think it's phenomenal. Yeah.
And this is where this whole growth area comes from as well, doesn't it?
Yeah.
I think so, yes. So I want to focus back on ULTUMUS a little bit because it's a really interesting story, that sort of classic back of a beer mat sort of conversation that ends up spawning very quickly. Here's a problem and how we're going to solve it, and then all of a sudden you've got a business. I love hearing those sort of stories. 3 years, you start off with the sort of spectre of Brexit behind it. It's an interesting time to start a business, and then all of a sudden this year we have everything that's gone on in 2020, a year that will live in infamy for forevermore. Tell us how you've navigated that, and why the business has been so successful in continuing to grow and continuing to win business and continuing to add value with such a sort of tremendous backdrop behind it.
Honestly, I think one of the things I learned from one of my original mentors, John Price, who set up Dividend and Derivatives Directory in the way back when, was the fact that probably the best time to start a company is during one of these recession type events, because effectively it focuses the mind in terms of you're really looking in terms of, right, what are your costs, what are your revenue associated with that, how to maximize the revenue and reduce your expenses. It's just a good business mindset more than anything else. And I think that's one of the aspects that we've taken across in terms of we are really focused in terms of what our costs are versus what is the revenue we get versus what is the cost benefit to our clients. And that is really one of the major parts that we focus in on day in, day out in terms of, it enabled us to start up the company. And I think the area that we've caused us to keep on growing is predominantly the specialization, as in terms of we're now the largest ETF calculation agent on a global basis. We've got clients in Australia, Hong Kong, Europe, Canada, and the US associated with our product. And the major driver behind that was we were able to prove the fact that we could actually go through their products, explain, document, and be able to deliver them consistently in an accurate manner to the street. And being able to do that consistently gives people confidence. It causes people to actually start wanting to trade these products because they know the data they receive. And again, what we've seen across the street is a lot of these trades are becoming more algorithmic, automated in their approach. We want to be able to feed data in and people be able to trade in the knowledge that that is accurate and comprehensive data.
There's an interesting conversation I had recently where someone sort of explained the concept behind capital markets and trading technology and the startups in the space who've succeeded versus those who haven't. And he sort of equated it to why we don't change our gas supplier all the time. There's costs there that you endure, and they're problems, but they're not big enough problems for you to really fix. And for you to say, right, I'm going to invest in that sort of play now because it's going to take up my time and energy to save that, ultimately not as much money or time or effort as you potentially could. And the businesses who've been really thriving are those ones who are saying, right, okay, it's not just that sort of nice to have piece, which will save you a bit of money and give you a bit of benefit, but it's those game changing things which give you a competitive advantage. It sounds like that's exactly been your model to add genuine advantage to the businesses you're serving, right?
Absolutely. And the thing, yeah, but I also think it's slightly unfair in terms of the capital market side, as in the forward-looking organizations are realizing how data dependent they are as well, in terms of having a single supplier of this data creates a risk associated with it on that side as well. So a lot of them, we've been going through comparison exercises and identifying issues that they didn't know they had. And when you've got a single golden source supplier, what are you comparing them to? How are you validating that data? You're assuming what comes in on a day-by-day basis is correct. And that's really what we've been seeing with a number of these organizations. As we've been working with them, we've been able to prove that what they thought was correct and the risk models had been predicated on that fact wasn't necessarily always the case. And yeah, we've been finding the capital markets teams have actually been very flexible. And again, fortunately, due to the technology that we've been utilizing, having APIs means that they don't have to do any deployment. They've been able to spin up comparison tools very quickly. And those reports that we've been generating out in conjunction with them have allowed us to analyze. And again, one of the major parts that we do is within our feed, we allow people access to the raw data for the ETF providers as well. That's reduced our support queries as well and enabled the traders to be able to go, oh no, these guys have actually got the data correct, and be able to move ahead on that basis as well. So,
I wanted to sort of advance on that a little bit as well, because I think there's an interesting change we've seen in the marketplace that's been driven by COVID, and people working from home has been a sort of a debate that we've seen raging over LinkedIn and everywhere for months. I'm not going to drive too much into that, but I am really interested in how there is a new way, there's new ways of engaging with customers. There's new ways of keeping customers happy. There's been, certainly massive positives and advantages from this. And I know that you guys in particular, and particularly yourself, have been very, very active in sort of repositioning the branding and the message and everything of your business. And we've seen your YouTube channel sort of grow your presence, grow a little bit on that as well. And you pushed yourself to the front to add real value to your customers. And I'm really interested in those businesses that have recognized that, and rather than sort of do the classic take, sell, have been looking to add value and answer questions and basically add to the communities which they're serving. It seems to me that's something you've really embraced. Tell us a little bit about that journey and how it's working for you.
Yeah, no, and to be honest, it was a great learning curve for ourselves as well, in terms of, I've been in this industry for the last 20 odd years. I've been used to the conventional coffee shop, pub type of conversation with clients and everything else. This was obviously a significant change, and I think it's been a very beneficial change to the industry as well, in terms of, I've got to give all credit to Zoom at this moment in time. I think they've transformed the industry, and I think there's no other situation where this could have worked. It was only the fact that everyone had to jump to a different way of working all in one go has enabled it. And I think from our side, in terms of the fact that I can have conversations with Australia in the morning, conversations with New York, and actually do it face to face, be able to share screens, go through detailed data analysis at people's desks, has been transformational. And that's really what we've found being to be, it's actually benefited us to a great extent, is that on a day-by-day basis, and we can have meetings day by day and go through the data that people are actually seeing on their desktop, has been transformational for us, because then it is the whole idea in terms of, we don't schedule meetings, go in when they don't have a problem. We can actually go in, see their screen, see exactly what the issue is, explain where the data has originated from, and do that on a real-time basis and on a day-by-day basis. Like yesterday, we had a problem with a ETF for one client, and we were able to actually walk through all the calculations with them using the real data, spreadsheets, and their data on a real-time basis, as in that hasn't been possible previously for us. And this has really enabled us to support clients to an extent that what wasn't available to us. And that is really what has been made our life so much more interesting, because hopefully we're seeing exactly what the issues are, but then being able to support the clients to that extent has been wonderful from our aspect. And yeah, the fact that we've got offices in Singapore, London, California, we're doing this 24 hours a day, and being able to support them directly from people's desks has made life a lot easier.
Yeah. So that's the existing clients. What about new business? Because a lot of this is positioning. And look, I know, as you say, you've been in the industry 20 years. There's most people in the space, which is a sort of, isn't the world's biggest space, will know of and around it. There's a natural piece there to be able to get closer to your customers and closer to your clients, which we've definitely seen. But I think the interesting thing for me comes down to how people continue to grow and continue to win new business and clients. And this is the majority of businesses I've been speaking to have done very, very well with their current customers, and they're sort of really going into overdrive to support that. But probably where we've lacked a little bit is that ability to break in and win new accounts and have those sign-offs without that coffee shop, pub, or meeting room sort of face-to-face sort of impact. Have you seen changes there?
Yeah, and fortunately, I think we've been very fortunate in the fact that as the ETF industry has expanded, I'm going to say we've managed to latch onto its coattails as well at that point in time, in terms of we're now seeing more and more clientele coming out, and people who hadn't appreciated were in this particular space. We've seen more and more buy-side clients wanting to get ETF data. They've seen what they've previously been looking at. We're doing a big education piece in terms of, by the way, the difference between creation baskets, tracking baskets, odd lot baskets, all this type of idea that people have not been previously familiar with. This is why people are now coming to the experts in this individual space. And ULTUMUS, fortunately, is that expert with a calculation agent for a lot of these ETF providers, and thus we are the best people positioned to explain what these data points actually mean and why we're creating them and calculating them for the various ETF providers overall. So yeah, yes, we are doing more and more email marketing, more and more LinkedIn type of stuff, YouTube et al., mainly to get the message out there. But it is the fact that we're now being found and people are coming to us because really they're wanting access to the primary source of the ETF data, which to a larger extent is becoming ULTUMUS by default.
And you've seen an increase in inbound traffic to you from everything that you've been doing around that, have you?
Most recently, yes, as in we did obviously notice as this year started off, there was a decrease as people settled into the new regime. But over the last, since August has finished, we've seen a substantial uptick in terms of people incoming, and we had done prior to that as well. And so I think the first couple of months were, as organizations got and I hate this phrase, the new normal, but I think once people understood their own internal organizations and those organizations couldn't just stop, we had seen an uptick in incoming calls, queries, emails, et al. And yeah, that has been phenomenal for our business overall. And yeah, I still keep coming back to the whole idea in terms of the fact that we've been at home. I think a lot of our team has been back into the office sort of 2-3 times, mainly for taking on new employees more than anything else. But from our perspective, it has all been done via Zoom and being able to have those conversations with clients on a very regular basis.
And what does taking on new employees look like for you? Because people have got that, some companies have got that absolutely right, and they've managed to onboard and I've seen companies sort of double and treble headcount over this period, which is phenomenal, really, isn't it? When you think there's people there who've very rarely met in the flesh who are still keeping that culture. You've been in that position yourselves, and you're taking people on, which will be your number one commodity, your people, and getting those people right. How's it been having people, onboarded remotely and never really being part of that sort of physical family that I presume most 3-year-old companies are sort of very keen on fostering?
Yeah, no, indeed. In terms of culture, it is one of our major drivers. In terms of, I think one of the things that we're trying to do these days, we have a morning meeting every day just to make sure that people are aware of what's going on, some of the issues that we're addressing, the combination of that with Slack in terms of our internal messaging and everything else has really enabled us to onboard those people very quickly and easily. And in terms of doing an education process for them in terms of not only their individual area that they're going to be working on, but the culture of the company overall has been very important. But yeah, it has also caused us to change our approach. As in previously we were going, by the way, yes, people needed to be in the office. That is no longer our attitude. As in, one of the individuals who we recently employed was in Amsterdam at that point in time, in terms of, so yes, we've never met him physically, and it is just that whole idea in terms of, right, makes no difference these days. We see them on a very regular basis, we converse with them daily. Where the physical location is hasn't really mattered.
Do you see that as a long-term thing? Will you go back to having people in the office again, or is this you for good now?
I'm sure we will end up with people back in the office again, but it's going to be their choice more than anything else. In terms of, like, we see people in terms of, when I log on in the morning, there's normally already somebody logged on prior to before 8 o'clock in the morning, and I still see people working past 8 p.m. at night. And it is that whole idea in terms of, we've got to become more flexible associated with it. As long as the work gets done, as long as our clients get supported, from my point of view, our productivity has gone up. And I think it is that whole idea in terms of not having to commute for 1-2 hours a day has been beneficial for most people overall. And yeah, I want to encourage it in terms of, if that works for people, and especially from our perspective, we've got an awful lot of developers. If they want to be able to work from home and if they still get the productivity done without the distractions, I've got to encourage it at the end of the day. It's a change in culture from our side, because if everybody, yes, I'm used to the idea of going out, being able to get feedback immediately, but fundamentally it's increased the productivity of our company, and I've got to encourage that.
Yeah, absolutely. So vive la revolution. So let's look at to finish up on all of this. It's been an exciting sort of journey so far. Tell us about what we can look forward to hearing from ULTUMUS. What's the next couple of years looking like for you?
I think from our point of view, as the ETF and index space is very interesting in terms of every day is a complete reset, as in everything that we'd done previously. We are just trying to refine this process, making sure we capture all the various data points, making sure we've got all the history associated with these various products. That is really where we're going to be spending all of our time. We're trying to make sure that as things change, people get alerted immediately. The big issue that we're trying to address right now is the fact that, how do we get the information out of all of this data? How do we tell people that, by the way, this corporate action is impacting the products that they're interested in? So it's the personalization of the data that's really where we're focusing in on. That's where we're trying to make things so that people, rather than get blasted with a significant amount of data, can choose which data points that they're interested in. That's really where ULTUMUS is aiming itself over the next couple of years, as in terms of, we've got over, I think at the last count, over 7 million indices going through our system on a day-by-day basis. We've got to be able to go, right, of those 7 millions, which ones are you interested in, and which ones are changing that you have to react to? So that's fundamentally what Ultumus is focusing in on over the next couple of years.
Sounds exciting. Sounds exciting. So, look, I think usually at this sort of stage, I'll say to for people who are interested, who should be reaching out to you. But I think probably most people in that space will have heard of Bernie Thurston by now and know a little bit about the story. But what's a lot of what you're doing is sort of repositioning products and value that you can add to people. Tell us a little bit about that and how people should get in touch with you, what people should really be touching base with about at the moment.
Yeah, as in from our side, it is just that education process associated with the ETFs. We're more than willing to demonstrate in terms of how we add value, in terms of being able to give people full visibility in terms of currency forwards within ETFs, how we cope with the rebalances of indices, how we deal with capital gains taxes, how we're enriching the industry as a whole, some of the things that we've built for individual providers associated with that side, just to make their products more visible, and ensuring the fact that people understand in terms of the switchability between ETFs. All of that type of stuff is things that we've developed our data feed to be able to provide directly into our clients, and that's really what we're going to be focusing on going forward. We would love the opportunity to be able to explain that to people and show people what the difference is that we can enable at that stage.
Superb. Well, listen, I hope they do reach out to you. I'm certainly off to move my pension around and and looking forward to reaping the rich rewards of that. Bernie, it's been an absolute pleasure hearing about the story and everything that's been going on with you guys, and to hear just sort of the scale. Obviously I've known the ETF space for a long time, but this is just the pure scalability of it is really exciting. So thanks for bringing that story to us, and thanks for joining us on the show.
Thank you very much appreciated.
Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot.